Hi everybody, it's Adam. I'm back here with another video, and today I'm going to go over what happened in the market. Not much news, but we can review where the market's going to go and also review today's trading. So let's get into it here. All right. To kick off these markets, it was a rough day. That's why I'm drinking some wine. But anyways, no, that's not why I'm drinking wine. It was a pretty good day. But anyways, just kidding about that. We have these relative equal lows that are sitting here on the weekly, and then we have these highs here that were just hit, possibly up in here. But if you look at the ES, just like the June contract, these highs were not hit yet, so I think we could possibly get up into there. But here on the regular ES chart, they were hit. This is what I'm looking at here. If we do end up trading down lower, I'm going to be looking for these lower prices down within here, because right now it looks like we're kind of just chilling out, not really doing much. So maybe this was a day that we could expect much not to happen, because we took buy side and now we can just chill out and not really expect some crazy movement. Give it some time, maybe it hits it one more time and comes lower. But really, we have a few different scenarios here. I think I would like to see price come up a little bit more, take out some of this internal buy side, and then start to shift lower and work its way back down in here, down in here, down in here, and then down below these equal lows before working up higher. So maybe we get something like that down into this range, down within here, and then we just hang out in here for a little while. As long as we are above, I believe, this breaker that's here on the weekly from right here, I think we can hold and continue higher up within this range. So maybe through May we come back down in, and then coming out of May, usually the saying is sell in May, go away, and then when we come out of May around here towards the end of May, we could start to be looping our way back up into that area if it does just want to have a nice retracement within here. So I'll be looking in the short term, looking for price to either show willingness to go lower or go higher based on 4-hour, 1-hour closes in my entries, and where price is going to be determined is going to be determined on the 15-minute and the 5-minute, in my opinion, when price comes to a point of interest to then trade in that direction. So what I have in my chart is looking at these lows, looking at these internal highs, and seeing if this high wants to stay intact or not. If we close really bullish up in here above this high, we could be reaching for this volume imbalance that's up here. But until then, until we get those bullish closes, I'll be looking for a bearish fold over down within this area, targeting down here like I just said. This is what happened today. The market basically was really high up from London session, and after we see a big expansion, I'm either going to expect consolidation during the morning session and then look for a PM session movement. So a PM session I was favoring right at the market open, or I was going to look down for like just a retest down into this order block for a continuation of a breaker trade. That's what I was looking at this morning. And then right after like 9:50, we started to have the 9:50 10:10 macro kick in, and then price did end up shifting down lower. So once we had this 15-minute closure and we started to close bearish, this 15-minute dildo closure right here, I was like, oh shit, where is the sell side? Right here's the nearest low, and down here there's a lot of money down there. All right, the other indices were also concluding this. Okay, so when we were looking at price action, I was like, okay, we have this 15-minute inversion. So the main time frames I look for inversion gaps are the 15-minute and the 5-minute, and this was the inversion gap that we had right here. And then I was like, okay, where can we get in? So 5-minute closure, we're still in the macro time frame from 9:50 10:10. Go to the 1-minute, we start to see this rejection, and then this 1-minute closure. I go down to the 15-second time frame, and I can see that we are about to start to fall down. Basically, we started testing the other side of that 15-minute gap. That's this gap I have here. I can even make this red if you want, so you can see it better. So this is where I was entering right here. Entered another position here because we had this 15-second fill in this fair value gap that was right here. We started to trade away. The other indices were confirming it. Liquidity is down below this low, and that's what I'm targeting, and I'm also targeting down here. So I entered my trade here. Take profit. Take profit 1. Close one of my trades. Comes back up, and since I had spread and I moved my stop loss to break even, I put it a little bit in profit so it doesn't hit me out. I moved my stop. It was a little too tight, I guess, but the spread hit me out. Rest position closed out. Price ended up trading down lower and going to the ultimate TP, which is a little bit annoying because I would have made a little bit more, but it's all a probabilistic standpoint. I'm not worried about that one trade. That one trade does not determine my success. So we'll get into that in a little bit. We end up trading down. We have this low here, lower low. And then over here, we can look at the 3 indices from this standpoint. We'll close this out and we'll just look at them. And basically, If you want to pause this and look at these lows and let me know what you think, okay? Think about what I'm about to say. All right, there we go. Let's get into it. S&P divergence. Make the lower low here, make the higher low here. We have this rally up. We have internal liquidity from this range, and then we have our afternoon session. The power hour 3 to 4. I look for 250 to 310, and I look from 310 to 345. And that's usually when the best trades set up, for, in my opinion, based on my plan for the afternoon session. So we start to see price have the S&P divergence. As we see, this made the lower low. We were rejected. We came higher. We started closing bullish in this fair value gap right here. We closed bullish up within here. And I'm looking for prices to keep working up higher. We have draws and liquidity up within here because everybody that's short has their stop loss trail. All right. So I'm looking at potential buys or sells in this. So I was seeing if price wanted to reach up into this breaker and trade down. Price didn't want to do that. I wanted to close bullish. And once it closed bullish, I was like, okay, we are looking to go higher. Going over here to ES, this is what I'm going to be looking at. We are looking for buys up into this area up within here. That's what I was looking at here, the clear gap up there that price could want to reach up into. All right, I was looking up there. Price closed bullish, and we also have this fair value gap here in the 5 minute, as you can tell, from here to here. Let's draw this out from here to here. And I was also looking at this previous breaker that was, it was a breaker when it broke through and came down, and then we started respecting it on the other side. But I was looking here at the 1 minute as well, and the breakers on this area. So I had them both marked up, as you can tell, from this breaker that was here to now reclaimed over in this area. And then now we have this breaker from here. This one right here came down, so this bought up, and now we're using it on the other side as a breaker. So close this off, and then here's that 5 minute gap. I was looking at this area. I started taking buys within here on the retest of this breaker that was right here, lined up with this one, with the draw and liquidity up there within our entry time frame of 250 to 310. Boom. Entry confirmations, stop loss down below here. You don't want to see price come down below the breaker, or basically I wanted to see this as a breakaway gap, but if it did want to come down and tap it and trade away, I was going to allow that to happen, which it did. It ended up doing that, and it came bullish again, and then price did end up coming back down to break even because I did not want to see price return back to these levels. Okay, I wanted to see price trade away and not come back if price was going to go bullish, because we were also at 15-minute rejection blocks. I can't remember if it was on ES or, yeah, it was on ES too, but there's on the other indices as well. So we came up higher, and these are rejection blocks that are sitting right within here. So these rejection blocks could act as rejection to catapult price back down to those levels, which it did. As you can tell, it used that as a form of resistance to bring price back down. And I was also using the closing price opening range, as you can tell here, as a form of support to even gravitate price higher. Price came back down, break even, done. Okay, like I said before, trading is based on a series of probabilities. This trade lined up with my breaker model. I had my drawn liquidity, had my S&P divergence, had my 5 minute closures, had my breaker. I was looking at for higher prices with my drawn liquidity. Everything was lining up to go bullish, but price did not want to go bullish. Okay, that's completely fine. I was looking at the conditions we were in. It ended up becoming chop, and that's not even something I want to be in anyway. I was trying to look for something a little bit later, but nothing formed. Okay, so as long as I'm very strict with my rules and I have low expectations, so I'm not expecting much. If I made money, cool, whatever. If I lost money, cool, whatever. Break even, cool, whatever. That's how it's got to be in every single trade, in my opinion. Not financial advice, but my opinion for myself, and that's just what I see with a lot of successful traders as well. Is that's how they trade. Okay, that's the way to do it. That's how I got my accounts funded, and that's how I'm going to continue to grow these accounts. Is just based on sticking to something like that, not being emotional. So being able to trust yourself. Yes, FOMO kicks in. If you want to ask me, how do you get rid of FOMO? It's basically writing out your plan and knowing what you're looking for. And this whole time, I know what I was looking for, and keep telling myself, I know what I can trust myself when I see it. So, for example, let me give you an example of where I had FOMO, where I used to enter trades. Okay, so price traded down lower. I used to see this as a break of structure, working its way down to go hit the sell side liquidity with these relative equal lows from here to here. The 1 hour is equal low. And I used to want to catch this trade when it tapped this fair value gap or tapped up in here to trade back down. I'm sure there's a lot of people that trade ICT that saw this as a break of market structure. Oh, fair value gap, let me short it. But what if these candles start closing bullish in this area? All right. I want to see, I trust myself. This is what I'm telling myself. I trust myself. If price wants to leave this area and go bearish, I will look for a re-entry. But if price just leaves right here without my entry, then I'm fine with it. I can miss out on a trade. Why would I want to be in a trade that's like not highly probable? That's just like what I'm thinking. I'm gonna wrap this video up here. Let me know if you guys have any questions. Take it easy. Love y'all. Peace out.